Gold didn't reverse because the trend is over. It's reversed because too many traders believe it was easy. Hello traders, welcome back to Nova channel, and let's continue another new topic today. Gold had just delivered one of the most emotional moves traders have seen in years. Price pushed aggressively into 5,100 zone, not once, but twice, and both times it fell to continue higher, triggering sharp pullbacks and shaking out late buyers. To many traders, this looks like a clear reversal, but the chart tells a more dangerous story. This is not a trend collapse. This is a liquidity event near all-time highs. And what is the chart is really saying? Let's find out now. Looking at the structure through EMA 34, 89, and 200, one thing is immediately clear. The larger trend remains strongly. All majors EMA are stacked cleanly upward. This price is still trading well above EMA 89, and the EMA 200 is far below current levels, a classic sign that long-term momentum is intact. So why did gold reverse at $5,100 level? Because that level is not resistance in the traditional sense. This is the distribution zone. If 5,100, price begins to stall, candles shrink, upper wicks appear, momentum slows. This behavior tells us that smart money is no longer pushing, it is unloading into late buyers. Retail traders' mistake is pause for consolidation. In reality, this is where impatience gets burnished. And why 5,100 is the trap zone. Psychologically, $5,100 is massive. Round number attracts attention. Breakouts attract FOMO, and all-time highs attract belief. When price reaches this area, traders stop thinking in probabilities and start thinking in certainty. This is when liquidity forms. Every breakout buy, every tie stop below recent lows, every emotional entry becomes fuel. Gold doesn't need to crash. It only needs to move just far enough to collect those others. And that is exactly what happened. The reversals from 5,100 were not signs of weakness. They were signs of exhaustion after an extended impulsive move. The key level that matters this week we need to concern is as below. Based on the current structure and EMA positioning, the market has defined very clear zones. The first one you need to concern is 50.85 to 51.20. This is a heavy retraction and distribution area. This is where chasing longs becomes dangerous and where short-term traps form. And the second entry you need to watch is 50.20 to 50.40. It also belongs to EMA 34 area. This is the first real support zone. If price pulls back here and holds, the bullish structure remains healthy. And the last area, 49.80 to 5,000, is also considered belonging to EMA 89 area. This is the decision zone. Holding here suggests continuation. Losing it opens the door to deeper correction, not reversal, but digestion. Moreover, this is not a week for prediction. This is a week for reaction. Highest probability abroad is right now is not breaking out trading. It is patience. Buying should only be considered after pullbacks, not during excitement. Price needs to return to value areas near EMA support and show rejection before longs make sense again. Chasing moves near 5,100 is exactly how accounts get drained at all-time highs. Short trades, if taken at all, must be tactical. Quick reaction near rejection zones, not emotional bets against the larger trend. Holding shorts against this structure is gambling, not trading. Gold is not telling traders that the bull market is over. It's telling traders this: the easy phase is finished. From here, gold will reward discipline and earnest urgency. Traders who wait for price to come to them will survive. Traders who chase confirmation will keep getting swept. At all-time highs, the market does not move to make money easy. It moves to make exposed. It moves to expose weakness. And right now, weakness lives in impatience. And final thought for Nova Scabbard traders in today's video. For a long-term trend, that is bullish, obviously. And for short-term behavior, that is distribution and volatility. And the best strategy I would like to advise you is trading with reactions, not breakouts. Wait for pullbacks, not excitement. Gold is still strong, but only traders who are willing to slow down. And that is the topic today. Thank you so much for watching. And don't forget to like and subscribe Nova channel to receive more useful video for your trading journey. Happy trading and see you in the next video.